Hey there, how's it going? My name is Jonathan, and in today's video, I'm going to be talking about the current state of the markets. I'm also going to be doing a follow-up on our last video, which was, if you haven't seen it already, the forecast for 2021 with respect to the Dow Jones Industrial Average. Now, why are we focusing on the Dow Jones, you may ask? Well, first of all, and finally, the Dow Jones is kind of like the Bitcoin market if you're involved in crypto right now. When that market, catches a cold, the whole world sneezes. So that's why we follow these big, countries like America, or if we're looking at cryptocurrencies, we follow Bitcoin very closely because we want to understand what they're doing. Because for the majority of the time, they're going to be what drives the rest of the market. So I'm going to be taking a look at the current forecast. When I'm taking a look at the Aussie market, it's also with respect to our current turn dates. And if you don't know what I'm talking about with our turn dates, don't worry. I'll give you a brief introduction to them when we get to that topic. And then we're going to switch over to the cryptocurrency markets, take a look at Bitcoin, we'll take a look at Ethereum, and we'll also probably take a look at VET, which is VeChain. Now, if you continue on watching this video, there's just one thing I want you to know. I'm not a licensed advisor, I'm not a licensed financial planner. I'm not that great. Go out there and get advice from someone who's licensed if you want to, employ anything that you learned today in this video. So I'll leave that with you. Let's go ahead and switch over to the chart because we're going to take a look, first of all, at the Dow Jones. Okay, so what you have on the screen here is you have the graph of the Dow Jones. Now, if you don't already have an idea of what this chart is, we have an orange line, and that orange line is going to be the forecast for the whole year. And then we have a black line, and that black line is the current market data. So with the Dow Jones, as we can see, we have risen quite sharply, and then we've sort of hit a top. So how does that compare with the actual forecast? Well, if we take a look at the forecast, there were two primary peaks and two primary lows that we were watching for this year. The first one is, let me go ahead and give my little trusty rectangle, and I'll unlock it. The first one was this peak right here, and that sort of coincided with this peak in the black bar, which is actual data down here. And then once the market peaked, it fell, it rose, and then it fell, and sort of had like a double bottom sort of reaction. If we look at the actual forecast, well, we can see that the market bottomed, it rose, and then it bottomed again into a double bottom sort of reaction. And then as we can see, it rallied very strongly in the actual Dow Jones. And also on the forecast, we can also see that it rallied very strongly. Now, when I put out the video about 2 weeks ago now, there was one thing that I was really worried about, and that was a potential top in the market. And I don't know what anyone else is talking about because I don't really follow that many people, but I may be the only one that publicly came out right on cue when this top was about to occur. And that's because the forecast that we've been watching, and if you haven't seen that, just scoot over to that video right now. Let me go ahead and put my phone on mute. Go ahead and scoot over to that video right now because it's going to give you a bit of a background on this. The forecast was producing a top in and around May. And then we were to decline in assets quite steeply. We were to bounce higher. And then we were looking to fall into around the July period, rise into August, and then fall into August. So sort of, a bit of a bounce period there. Now, you might be thinking, this forecast doesn't look very accurate, and I totally get it. So what I'm going to do is I'm going to just move this back. I'm going to change the offset just a little bit, just so I can line up some of these peaks. Now, the forecast doesn't get, extremely accurate, but we're looking for curves, and that's the whole point of this. We want to know what is the bias for the year. So if we go ahead and now line up, go ahead and line up the tops, we can see that these tops are lining up. The decline was quite severe, and it bottomed out quite early. We had a huge rally up, and now these tops are lined up. The first low that came into the market rebounded quickly, but now we're at a period of we need to sort of take a step back and not make any rash decisions, because now what we have is we have a bit of a situation where the market could turn either direction. It could either continue rising up or it can continue falling. Let me draw it and show you. So I'll try and grab maybe like a poly tool here. So the market could, from here, rise down, go up, go down, and then it could go up and break the top, okay? That's the first option. Oops. Let me go ahead and get my poly tool again. Now the market could go, and it could come down. What's wrong with my poly? 1 second, technical issue. What I'm gonna do is I'm gonna change to a pencil because my poly isn't working. If I could spell, that would be awesome. Okay, so the market, oh, nothing's working. Would you look at that? Let me get rid of everything here.
A few moments later.
Okay, so we got our pencil fixed. So we could go down, we could rise up, and now, as you can see, what could happen is we could continue to fall like the pattern suggests. So we need to be watching now if the market is going to rise above its current high, or if it's going to follow this pattern, which is the forecast, and fall lower. The key indicator here is if the market falls below the low. Now, there's one thing I like to do is I like to forecast, but forecasting is just that, it's a forecast. There's no guarantee that the forecast is going to be accurate, and there's no guarantee that the forecast is going to play out. So with whatever information or whatever data set we're forecasting into the future, we need to take it with a grain of salt. We also need to be overlaying continuous probability onto that. So what's the likelihood of this happening? And if it doesn't happen, well, what's the alternative that could happen? So whilst the forecast is going down, I could just simply, right now, open up some bearish bets and short the market. But what happens if the market doesn't go down? Well, where's my stop loss? Where's my take profit? All that sort of stuff. I need to know that well in advance before I actually go ahead and place the trade. So that's what we want to know. What are all the options that are available? Now, first of all, we know that the market's going to go up, it's going to go down, or it's going to go sideways. So those are the three directions: up, down, sideways. So now they're in a state of flux right here where the market's sort of, between a range where it's moved up, it's moved down, and now we're sort of stuck. We can't make any decision right now until we get confirmation that the market's going to either move higher or lower. And we understand that it's going to do that by breaking either higher or lower, below or above certain areas. And at this point, we're kind of looking around, let me go ahead and turn my tool off. We're looking around the 33,000 mark and the $35,000 mark, for 35,000 point mark, for the Dow Jones. So that's where we are right now. And with that said, I'm going to recap the Dow Jones because I don't normally share this information publicly. This information generally gets shared behind closed doors with a small group of investors who appreciate this information. Let's say, where are we right now? Well, if the market falls lower, a break below here is bearish. It could be a bear trap, and what that means is it could break down and then rise back up. So we always got to take everything with a grain of salt and play it day by day, just for a little while. Or the market could move higher, and then it could be a bull trap and it could fall lower. So we don't want to, as soon as it breaks, we don't want to be taking any action in the market. We don't be like, okay, it's broken by 1 cent, let's go out and jump out and short the market, or it's risen by 1 cent, let's go ahead and go long the market. We don't want to be making any decisions as soon as the event occurs. We want to get confirmation, and the way we get confirmation is simply wait a few days or even a week to make sure that everyone else around us is agreeing with this thesis. The market is going higher or lower from here. So with that said, right now, for the Dow Jones, we wait. Okay, so what I'm going to do now is I'm going to switch over to, let me go ahead and pull up another chart, the XJO, because we're going to take a look at these turn dates that we've been forecasting all year now. So we'll go XJO, take it off crypto. Okay, so every year what we do is we forecast, we forecast turn dates for the market, and we produce them, one whole year in advance. And then we actually go ahead and see, as we go through the year, which turn dates are actually succeeded and which ones have failed. Now, generally speaking, they don't fail. We either miss it by 1 or 2 days, and then what we do is recalibrate for the next year. It's as simple as that. So in this instance, the turn dates that we produced for the month of May was the 11th, the 13th, and then I'll look down here, we had the 16th as a turn date. So the 16th what do we got? We got the 16th occurred on the weekend, so that's why we marked the 13th as a low, because we had the 14th and then we had the 17th. So the 16th landed on the weekend. So we go one trading day or one trading day after. And then the next one was the 22nd. Now the 22nd is due to occur either the last trading day that just occurred, which was Friday, or the following trading day that's occurred, which is the coming Monday, and that's the Monday, the 24th, okay? So for this trading date, it is every chance, this is why we have this box here tagged up, there is every chance that we could get a top in the market, and that would be an interesting signal that we might be heading lower from here. So now I don't want you to make any rash decisions, but if we get a top in the market, it could be a bearish signal for the short term. Now, how far could that market fall? Well, if it's going to be anything like the Dow Jones, we could be expecting like a 10-15% decline. And if we really want to get an understanding of how far this market could fall, where we could start doing some price analysis. So if I go ahead and do some quick short-term price analysis, what we want to do is use both Gann and Fibonacci price ranges, and we want to get an idea on how far this market could fall through a method called price clustering. Now, I don't openly teach price clustering. I think it's quite an important lesson that should be learned, but we don't want everyone to know it. That's why we keep it a secret. But we essentially look for areas where the market could find support in the future. Now, if we take a look at this low here, and we take a look at this high up here, we can see that this green line actually occurred with past lows in the market. Now, this is telling us that we have a natural support and resistance level here, but this support and resistance level was also giving us indication of a future top. I know it sounds a little confusing right now, so bear with me, but with that said, this top could have been forecasted if we use this sort of technique. So where's the market likely to fall? Well, I'm going to take this latest one here. I'm going to stick on the 50% level, 38.2 and 0.618 level, because I want to get an idea on what's the likely chance of it falling. So if we take the most recent low, which is this low here on the 1st of February, and we pull it up to the top, we want to get an idea on how strong the market is. And we get an idea on how strong the market is by understanding how far it's fallen. Because what WD Gann always said was if the market can remain above its halfway point, which is a neutral point, the market was considered strong. If it falls below that halfway point, then the market is considered weak and it could continue to fall. Now, if you're following any other YouTuber out there and they're telling you to pop on a Fibonacci tool and to look for the 50% level, well, you have to sort of question where they got their knowledge from, because the Fibonacci tool includes a 50% level on TradingView because the 50% level is used by a lot of professional traders. But it was actually WD Gann who had discovered and used the 50% level and not any Fibonacci sort of number sequence. So that's why I color it different, because it's not a Fibonacci level. And I just want you to be careful where you're getting your information from, because it could be incorrectly informing you, okay? So what do we have here if we zoom in? Well, what we can see here is we take the most recent low, which occurred on the 1st of Feb, and we pull it up to the high. We currently have the market hovering around the 38.2% level, and that 38.2% level is right here. So let me go ahead and draw that in. 38.2%. This is the 61%. My golly gosh. So I can use my finger instead. And this is the 50%, okay? So this level here is important. If we get the market topping out here, or I should say topping out here on the next trading day, which is Monday, and then falling, if it falls and it breaks the 38.2% level, but it stays above the 50% level, it's still considered in a strong position, and it still can rise from there. If it falls below the 50% level, hits the 61.8% level, and then fails to rise above the 50% level, then we could be on the lookout for further declines to come, okay? Now, I don't know how far the market's gonna fall, that's a guarantee. Let me go ahead and change this. If we do some quick math here, if it was to fall down to this green level, which is a longer term, so it's actually coming from this halfway point, or sorry, the old natural halfway point, and going up to the top, well, that's actually a 10% decline, and that would be a perfect hit at the 50% level. So I wouldn't be surprised, let me go ahead and get up the drawing, I wouldn't be surprised if it did that, and I think that would be a beautiful setup for the future, but there's no guarantee just yet. We need to wait and see what actually happens. Now, in saying that, how far has the market declined in the past? Well, let's go ahead and do some quick math. Market's declined 4% here, declined 5% here, around 7% here, around 7% here. I won't do the COVID-19 crash because we all know what happened there. And currently it's down 3.5%. So if it was to average out the last percentage point was around 7 to 10%, that could put us down, I'll say 5 to 7% actually. That could put us down to the 61.8% level, and it could pull us down to these sort of lows back here. Regardless, if it stays above the 50% level on this longer term one that I drew, and I'll go ahead and add the 38.2% level because just in case we can get some support around here, and I'll go ahead and add the 38.2% level, and we get some support around here, then, you know, it'd be fair. I think that would be a fair decline. If the market came down, if it is bearish and the forecast for the Dow Jones is accurate, and we get a decline of around 7%, and it comes into this 38.2% level, I'd say that's still healthy. Nothing to worry about. There's no change to the market at all. And that would set us up for long-term rise. Now, the thesis for the whole year, for the last 3 years, has been bull run for 2019, market crash for 2020, and best buying area or best trading area of the next cycle to be in 2021. Now, the reason why I would say 2021 was the best trading and buying area for the next half of the cycle was because we had all the fear already wiped out. We've already done with that. Coronavirus fear would have been done and dusted. The recession fears would have been done and dusted. And despite the market rising over this time period, I always said to whoever came and asked me about trading or investing, I always said that the year 2020 is the year to be learning everything you can about the markets, because come 2021, you're going to want to be in a position to actually invest. Now that means, from an index perspective, if you didn't buy the low that occurred in March and ride it up, that means you would have missed out on a 60% gain. But what it would have meant is that you would have developed and obtained the skills to actually be able to invest in this market. This whole market right here has been nothing but rising prices. You know, you get the odd market decline and things like that, which is completely healthy, but you would have obtained no skill. You bought in at low and you simply rode it higher. There's no skill required for that. So, you know, you do what you want to do, but education for the last year would have been key in my opinion. And I tried to urge people just to obtain education, spend the time learning, because 2021, once we get this potential mid-May decline into potential August time, it's going to be a good time to set up positions for the long term. So anyway, I'll leave that with you. You do what the hell you want. I don't care. Just passing on some vibe, you know, some information. So where are we now? Waiting for a turn date to recap. And we're looking to see how far we fall from there. Let's go to Bitcoin. The BTC USD. Let's go ahead and take a look. This baby has crashed. We put out 2 forecasts. The first forecast was a turn date on the 13th. The second one was a turn date on the 21st. The turn date for the 21st may have came in 2 days early, and as a result, where's my arrows? Let me go ahead and find my arrows. I don't like that arrow. Where is it? Is that the right arrow? Who cares? Let's go ahead and copy and paste this. As a result, we could have actually had the low, because we always give 1 to 2 days leeway. We could have had the low on the 19th. So what do we do from here? Well, unfortunately, you know, this isn't looking good. And I say that because remember those green lines, how I said if the market stays above the green line, that's good. If it falls below the green line, then that's bad. Unfortunately for Bitcoin, it did fall below the green line. Now, a lot of people go into the whole Wyckoff method and things like that. I don't sort of subscribe to that method, just in the sense of I just look for other things. So, they could be right in the sense that this was a huge dump on the market, so be it, whatever. I can't be bullish on Bitcoin until it rises above the 50% level, and the medium term 50% level. So this one here is the level that's going back to November 2020. But if we take a look at the long-term levels, where's this one going? It's there. I'm just going to pop on another one for us to take a look at. So let's go back to March. I don't like my charts this messy. This is a freaking disaster, and I hate it. Normally, I wouldn't have all these on here. God, gosh. How do I hide it? These cycles I'm going to get rid of. These are cycles that I have been watching for lows and highs in the market. So this one's going to expire, so I can get rid of them. That's my research. Bitcoin, I'm going to explain it. So short term, the structure for Bitcoin is simple. Bitcoin came down and it broke below this 50% level. It broke below this 50% level. It broke below this one, but has now remained above it. Now, every time frame is important. It doesn't matter if you're doing a daily time frame, a weekly time frame, a monthly time frame. If you want to get more data, all you do is stretch out the chart, go back further, and then you can do the same analysis over longer time frames. If you want to know the strength of the market for the long term and not the short term, you go out further. So long term speaking, if we take it over a whole year, Bitcoin is still considered strong because it has remained above the 50% level of a year. But short term, so the last 6 to 8 months, for example, Bitcoin has broken below some key levels, and therefore short term and potentially short to medium term, Bitcoin is looking weak. Now, the whole thesis for this year on Bitcoin for me is that we could get a low in around August. Now, a lot of people are saying that with the whole Wyckoff, I'm just going to bring that up again, that there's a whole dump and that the recovery period is going to be long. Now, if that is true, well, then that lines up with my thesis. So I don't really care what method you use. As long as the thesis matches, then I'm totally okay with that. So where to from here? Well, people are expecting a V-shaped recovery like they did in coronavirus. Now, V-shaped recovery is simply like this. It's where the market falls and it comes back up really strong. So if the market's going to fall and it comes back up really strong, that is considered a V-shaped recovery. I was expecting something like this. Let me go ahead and clean the chart up. Oh, golly gosh. I was expecting something like this for this year. A peak in April, a decline, a rally, and then a decline, and then sort of like a slow grind lower until August. That's kind of the image that I was picturing for this year. And then once that finished, then I believe that August may have been the best option to buy, and we got our boom until we entered our bear market. That's sort of, the thesis I was thinking about and looking at and chasing. What we got instead, though, as we can see, is we got our rally into April. We had our slow bounce, but then we had a major correction. So it's a little bit different to what I was thinking, which is totally okay because you can't always get it right, and I'm totally cool with that. Oh my God, everything's going wrong right now. All right, chart's clean. Chart's always clean. Got to make your chart clean. So with all this waffling I'm doing, what should you be concerned about now? Well, I'm going to be making sure that Bitcoin in particular, and if the 19th of May is in fact going to be the low, Bitcoin can hover around this level until around the 25th of May, which is the next turn date. And if it makes another low on the 25th, then I'm hoping for a slight bounce. I don't care if it hits resistance. As long as I don't get a V-shaped recovery, I'm going to be quite confident, because what I want to see is I want to see Bitcoin sort of trade up and down. This is called a sideways pattern because price is confined within a sideways, wedge. I would be happy if price remains sideways for at least a month or two. Now, that's probably not going to happen because, everyone's going to want to jump in. But if we can get this sort of sideways action occur, that's totally cool with me. I want to see it happen until around the end of July, maybe August period. And then once that's done, I'd be happy to set longs for an end of year rally. So where to from here? Well, I'll be sitting on the sidelines and simply waiting to see what occurs. If the market does, however, rally higher from here, well, we can't miss out. If we miss out, we're going to miss out. So I'm going to set, some areas where I would like to see Bitcoin rally to. I think there's strong resistance around this level because we've got a number of price areas. So if I go ahead and rectangle this low, so this low right here, is merging with some price clustering of other areas. So I'm going to mark this on the chart to watch. We have this area down here, which is price clustering. We have, what do we got? We've got these ones. We have a bunch of price clustering here. And then we've got some support through we've got natural resistance, sorry, not natural support. We've got natural resistance through some tops that occurred here. And then we've got our current all-time high, which is up here. So these are the areas I'm watching. If Bitcoin, get my pencil, always got to get my pencil. If Bitcoin rises, hits this area and falls, that's okay. It's heading up against natural resistance. If Bitcoin falls and rises from here, again, okay, heading against natural support. If it breaks above it and sort of wedges between here, again, totally okay, natural support and resistance. I would be more happy if Bitcoin sort of jumps around these natural support and resistance levels than instead of just breaking through every single one and going higher, because that's not healthy. I don't think that's healthy. Maybe someone else thinks it's healthy. Maybe you think it's healthy. I don't think it's healthy. I'd like to see Bitcoin sort of bubble around these areas where possible. All right, so we'll just switch over to VET now, and we're going to take a quick look at this one. Now, VET did a very similar thing to Bitcoin, where it had its top and it blasted lower like every other thing in the market. And what we have right here is we had a low on the 19th, which is very similar to Bitcoin, so it's totally okay. And I have already drawn on like support and resistance levels, which I've been watching for a little while. And I think around the 16 to 17 US dollar mark, US 16 to 70 cents of USD is an area of natural resistance. So very similar to Bitcoin, I would be happy to see it come up and fall away. If it comes up and breaks through it very strongly, I think that we're getting too much buy demand and it would be unhealthy. If it breaks up strongly and doesn't come back, that's unhealthy. If it breaks up strongly and then sort of hovers around it before moving again, I would be comfortable with that. I don't have much to say on this chart because we all know what's happened. VET has fallen through. It's hit lower support level. There's another one below it, which we have been watching as well. But it's hit lower support level, and it did change on the 19th. The next turn date, I believe we have marked is around the 25th to the 27th, around that mark. So if we get another low around that date, then that could mean potentially rising prices. Now, I'm not saying bullish rise. I'm just saying potentially rising prices, at least for the short term. Remember, we're looking for our ultimate low in August, July, August, somewhere around there. What's going on? Let's get rid of all these old charts. Okay, good, go away. Leave, save, leave. Okay, now with the Ethereum, this is the last one I wanted to look at. Everyone's always like asking about Ethereum, and I do like Ethereum. I have money in Ethereum. I think it's done a fantastic job over the last several months. And what I wanted to do is I wanted to look at the current history of crashes. So if I go ahead and turn on the log chart is actually going to make price move from a dollar value to a percentage value. So actually going to be see how far price has moved in percentage terms. It makes it a lot easier to actually see that. So if we take this top, get rid of this one. If we take this top here and we bring it down, we have a 60% decline. If we take this top here and bring it down, we got a 60% decline. This one here, bring it down, 60% decline. This one down 70%. This one down, this was the bear period. So we were expecting, obviously we know in hindsight there was a major crash there. And 70%, my friends, we're getting a continuous repeat in price retracements. If the bull run is still on, there is every chance that now is a fantastic place to buy. If the bull run is over, we know what's going to happen. The market's going to decline up to 90%. 80 to 90% is natural for a crypto bear market. If the bull run is going to remain, then a decline into the 70% mark is comfortable. So with this current decline in the 60% mark, it's scary. I completely get it. With this decline though, it could be wise to take some bets. If the market falls down 70% like it did in the past, we could get some lows around the $1,200 mark. That's in USD. I'm not giving you any advice or anything, but if you believe in the bull run and you think that this market is heading higher, you could place some bets. I will be looking to invest, but in saying that, from its current price to this low down here, you could see a 45% decline in the value of your investment if you bought at this price and it continued to fall down into the 70% level. Remember, we were measuring past declines, and they averaged between 60 to 70 in a bull run, and then they crashed as high as 90% in a bear run. So you could be looking at a 45% decline more in the value of this market if you buy it today. But in saying that, if the market is going to be bullish, which we're looking for the August period, so I'm not saying be a bull today. You got plenty of time, in my opinion, to think about it. And yeah, I don't know. Are you reading between the lines? Like, just make your own decision. I'm not telling you what to do. And then let's take a look at the rallies. Well, this major rally here was 500%. We had a short rally of 50% and another rally of 200%. If we go ahead and take this whole rally though, that was a 250% rally. If we take this rally here, first one was 180, sorry, this one of, around 500%. This rally here of 150%. I'll go into measuring, or maybe I won't, we'll see. I'll go into measuring price percentages maybe in a future video and actually telling you how to use this to your advantage, because markets work in sync, and they often say, well, according to ASX, this isn't true, but with technical analysis, they say that past performance is an indicator of future performance, because we use the past to forecast and predict the future with technical analysis. But ASX believes that past performance is not an indicator of the future. So, there's two schools of thought here. So whichever one you're in, that's totally okay. I'm not judging. But if we measure all these highs and lows, we can start to get not only percentages, but also dollar values in runs. And we're able to say that, look, this market ran $1,000 in the past, and it's done that 6 times already. There's a very high chance that it's going to do it again. So it could be, trading at $1,293, like some random number. And then it moves to $2,000, I forgot what I said, $93 or something. If that $1,000 or the 1,000 point move is repeating itself, it doesn't matter what value you're at, it's going to continue to repeat until it doesn't. So we can also use that sort of stuff. So there's a whole range of skills. I'm trying to keep it really simple today and just giving you like an overview of everything. I know this video is super long, but I'm just trying to give you an overview of everything so you can make some decisions. Everyone in this freaking universe is always saying everything's going to the freaking moon, and not everything goes to the freaking moon. There's 90% decline, but not the freaking moon. So yeah, you gotta think with your head switched on, and you can't make irrational decisions in this market. So if you're buying today, I think that that might be a wise decision, but the risk is also another potential 45% decline. So I just want you to keep that in mind. If the market continues down 45%, if it continues up, and we're still in a bull run, it could be anywhere between 200 to 500% based on the past. Anyway, I'll leave that with you. This video is super long. I'm sick of talking. If you have any questions about what we talked about today, we've covered the Dow Jones, the forecast on that. We covered the XJO and our specific turn dates for the year. Maybe I'll teach you how to do that. Maybe I won't. We'll see. We've also taken a look at Bitcoin, BET, and Ethereum. If there's anything you want to know, I'll provide you an alternative opinion on everything. Been in this game a very long time. And yeah, you know what to do. If you liked it, leave a thumbs up. If you want to subscribe. If you've got a comment, leave it below. Talk to you soon.